Hello viewers, welcome to RReduVids, a place to rewire your brains. Financial statements. They provide a snapshot or a picture of an organization's financial health. They provide information pertaining to organization's expenditure, revenues, profits, losses, assets, and liabilities. In a nutshell, these financial statements show how a business operates. Financial statements of an organization enable different stakeholders of an organization to make informed financial decisions. There are conventionally three main types of financial statements. Number one, balance sheet. Number two, income statement. Number three, cash flow statement. Balance sheet provides an overview of assets, liabilities, and shareholders' equity during a particular period of time. Income statement focuses on organization's revenues and expenses during a particular period of time. Based on this, a statement indicating net income or loss is arrived at. It's also termed as profit and loss account. Cash flow statement complements balance sheet and income statement for effective and efficient financial decision making. Cash flow statement summarizes the amount of cash and cash equivalents entering as well as leaving the organization. Thank you viewers for watching RReduVids. For more such information, please like, share and subscribe to RReduVids. Namaste.